Yeah, I expected it to be far higher than it was even at the peak last year. I think this is the beginning, and I've publicly said that I have technical reasons to be bullish on Bitcoin right now as a bottoming sign. But I also have the other part that I mentioned, which is when Opus 4.5 came out, all of the dollars in the world went to the agentic world. I will say to everyone here, by the end of this year, I believe fully that it will double. And the only way that's not going to happen is if the infrastructure trade continues at the same pace, which is literally impossible based on what we've seen. And at the same point, the Fed is going to be more hawkish, meaning Donald Trump put someone in the Fed seat who is going to disrupt the midterms even more than what it just doesn't make any logical sense. So I think you're going to see a big change, and I think you're going to see the dollar weaken, and you're going to see Bitcoin go high.
Wall Street just watched Bitcoin lose half its value and double anyway. That's the story nobody's telling you. Bitcoin is down 50% from its lofty high of $126,000. But that's not stopping top investment firms and Wall Street analysts from issuing bullish price targets for the world's leading cryptocurrency. Take Jordi Visser. He said he expected Bitcoin to reach much higher prices than it did, even at last year's peak. Still, he expects investment capital to rotate back into Bitcoin, and he believes it has the potential to double by the end of the year. Visser also doesn't believe the Fed will raise interest rates. He argued that if the Fed intended to raise rates, it would have already acted. If the Fed stays on hold, Visser believes Bitcoin is forming a major bottom right now, and that both his technical analysis and the broader macro environment back up a bullish outlook. Now add Wall Street to that. Bernstein is doubling on its $150,000 price target for Bitcoin. That's a stunning 135% price increase over a relatively short period. Even Bernstein admits the target is ambitious. Bitcoin is still trading lower now, at $63,300, than on Election Day 2024, when it sat at $69,000. But it's not all clean. Trading volume is far below the October 2025 peak, and the Fed's June minutes showed no rate cut bias, adding fresh pressure to the market. If you're new here, welcome. We're a small but growing channel chasing 1,000 subscribers, and every single one of yours matters. Hit subscribe, and let's build this together.
Yeah, I expected it to be far higher than it was even at the peak last year. So I've been wrong on that, and I just talked about how I was wrong on Micron getting out at 650. So I'm wrong almost every week in something. The good thing is I've always been a believer and try to find things that are asymmetric. So in the case of Bitcoin, here's the main thing. After Donald Trump became president, having traded markets for a long time, part of the reason that I thought it would go up much higher is because it defied something that I hadn't seen happen before. Meaning, people may forget this, but the year of 2024, effectively, you had the ETF, and then you had the United States elect a president who embraced Bitcoin, who said crypto is going to be a part of this. Now, I always believed the biggest risk in crypto and Bitcoin was never quantum. I always believed the biggest risk was that governments would just continue to delay its inevitability for a long time. The fact that the leaders of the free world and the leaders of the financial system were the ones to embrace it. And the voting, in a lot of ways, Donald Trump was elected because of his stance on crypto, which was a brilliant way to make sure that he got a very, very fast growing, followers. I think where we are very simply on Bitcoin is this. AI accelerated with Opus 4.5, which occurred in November. The Fed, for December of this year, the Fed was expected to have 150 cuts as of October of last year. I have shown a chart in my subscriber videos that basically Bitcoin has followed the probability of rate cuts. We've gone from 150 as of September to now by the end of this year, we have 40 basis points of hikes built in. So Bitcoin followed the path of future money supply being tighter. I believe the Fed is not going to raise rates. If they do, I think he would have to do it now, meaning July. There's your first little surprise side. And the reason I think that is if he was interested in credibility, why not just come out of the gates, do 25? If they're interested in the long end coming down, that would guarantee it immediately if he's going to say that he's going to raise it, especially when we're going to have a negative CPI print. If they don't, I think this is the beginning, and I've publicly said that I have technical reasons to be bullish on Bitcoin right now as a bottoming sign. But I also have the other part that I mentioned, which is when Opus 4.5 came out, all of the dollars in the world went to the agentic world. And it made sense because Micron went from 60 to 1,300. It was a 20 bagger. Those are crypto type moves. You're not going to get those anymore in any of the AI stocks. You're now going to get your boring 30 to 40% a year on the infrastructure names. And it's not going to happen with a good volatility. It's going to happen with a higher volatility than Bitcoin. So I will say to everyone here, by the end of this year, I believe fully that it will double. And the only way that's not going to happen is if the infrastructure trade continues at the same pace, which is literally impossible based on what we've seen. And at the same point, the Fed is going to be more hawkish, meaning Donald Trump put someone in the Fed seat who is going to disrupt the midterms even more than what it just doesn't make any logical sense. So I think you're going to see a big change, and I think you're going to see the dollar weaken, and you're going to see Bitcoin go higher.
What if the next Bitcoin trade isn't made by a human at all? AI agents are already lining up to take the wheel. Jordi Visser believes AI agents will significantly increase transaction volumes and the velocity of money, creating additional demand for digital assets. As a result, he believes investors should maintain exposure to Bitcoin and the broader digital asset market. Here's his thinking. The next phase of digital assets may be agentic, but it won't scale on automation alone. AI agents can make markets more efficient, make infrastructure more accessible, and help users navigate increasingly complex digital asset environments. But the adoption curve will ultimately depend on trust. So how much should you hold? In Visser's opinion, a portfolio allocation of 3% to 5% is appropriate for most investors. Younger investors with higher risk tolerance could consider allocating up to 20%. For those seeking balanced exposure, he believes around 10% is reasonable. Visser also pointed out that innovation in crypto moves extremely fast. Today's leading blockchain could be Ethereum, tomorrow, Solana. Later, another network like Sway could take the lead. Because winners change so rapidly, investors would have to continually rebalance to keep up. Let's get back to the interview.
Tokenization is part of crypto. As more tokenization happens, you're going to have dormant assets become alive as cash, and that just means higher velocity of money, which means higher GDP. At the same point, as stable coins are going, you're getting more cross-border volume. You're getting more cash transactions. I have shown that Bitcoin is the S&P 500 of digital assets. So for people to understand this, I've created a 40-name crypto index, which has 34 tokens and 6 public companies that are in 8 different verticals. Think of them as sectors. When you equal weight all of them, the chart is exactly the same as Bitcoin. Bitcoin is the S&P 500 of the future for the digital asset world. So when I want to invest, I could either invest in 40 names, but the performance is incredibly correlated to Bitcoin. I only choose Bitcoin because those are innovations. And the only way that'll work out is, like I said before, there is no S&P index. These are going to change so rapidly. Ethereum works today. Solana works tomorrow. Sui works the day after. You don't know who the winner is, but you have to keep rotating the portfolio. So that is my angle on this, is I think the agents are going to drive volumes. They're going to drive velocity of money, and you want to be invested in it. And right now you have to have 3 to 5% of your money in it. In my opinion, I would be leaning on the higher side if I was younger, up to 20% if I was much younger. And then if you're sitting there and you view it somewhere beta wise, it should be around 10. So if I said to everyone in Bitcoin, if I asked everyone, what's the volatility in it? So the volatility in Bitcoin is now down to about 30. The stock market this year is completely dominated by the AI trade. I have a thematic portfolio that I release to my subscribers that has 100 names that are directly connected to it. It's my version of what the S&P 500 will look like in the future based on all of the progress happening, everything related to data centers, to agentic world, everything. The issue with it is when I go through this and I talk to people, I'm like, are you invested? Did you invest in Micron? Yeah, I did. Okay. Micron has a 90 vol. It's 3 times Bitcoin. This has never been about volatility. This has been about, the book Sapiens pointed out to all of us, which is human beings need stories. And they can attach themselves to people like Jeremy Grantham because he's very smart and he can talk about the numbers. He can talk about history, and it sounds very compelling. Like you said, you can go back over history and say, well, the last time we were at this level, this happened. You can't do that with Bitcoin or with crypto because it has no narrative. The narrative is missed. So here's what I want to get away from the volatility and just give people a different way to think about this. The Bitcoin white paper came out, and I think at that point people got embraced with this is a thing to get away from fiat currencies. This is something to break the system. You had Charlie Munger speak out against it, Warren Buffett. You had all of these people speak out against it.
Bitcoin is entering a period that many investors believe could shape the future of finance. As adoption grows, technology advances, and more money moves into digital assets, Bitcoin continues to stand at the center of these changes. Whether you're already investing or just watching the market, the next few months could be very important. Staying informed, managing risk, and focusing on the bigger picture may help you make better decisions. If Bitcoin continues gaining support from institutions, businesses, and governments, its long-term potential could become even stronger. Do you believe Bitcoin is preparing for its next historic rally? Share your thoughts in the comments below. We'd love to hear your opinion. If you enjoyed this video, don't forget to like, subscribe, and turn on notifications so you never miss the latest Bitcoin updates. Thanks for watching, and we'll see you in the next video.